Hello and welcome to Growth and Value Stocks. My name is James Boyd. We welcome you here today. We've got Connie Hill with us in the chat. Welcome her as well. And speaking of all of you, we have with us Trader Joe, Dom, Joe, Tech One Trades, Richard, and GT or Gary Taylor. We also got someone from Omaha, Nebraska. I was born in Lincoln. Go Big Red. It's always about the Big Red. Anyway, welcome to Richard and many others. So today, what we want to really do is this is live, but it's also recorded. Some of you might watch this on recording. We welcome you. This is not a one-off session. We meet on a weekly basis and we focus on finding and looking and investing in growth and value stocks. Now, when we talk about growth stocks, we tend to be looking for companies more in maybe the technology space, the discretionary base. Probably those are the two main areas. When we talk about value, value could be in all of the different sectors, okay? But really, growth tends to be focused really in those two sectors of technology and discretionaries. Not all the time, but on a majority basis. Our focus here that we want to do here today is talk about looking for growth historically from last year to this year. Second, looking from this year now to the forecast. So a lot of times as investors, we tend to be reacting to, we don't really have an idea of what could be growing. Okay. And so I really want to kind of focus on that here today. How do we find that growth in terms of the revenue, earnings per share? We'll talk about a search we can look at. Now, as I talk about that search on schwab.com, you're going to see that there's a couple doors that we can open that could be very interesting to kind of look for different things as well. We'll talk about also comparing companies. And last, third, when we actually have stocks that are kind of having a backing of fundamentals, how do we kind of marry that into the technicals to look for setups now? Okay. So just real quick as we get started, remember that Connie and myself, all of us instructors, we post educational content on X. There's my handle. You're going to also see that when we talk about the information, we're going to present the information for general informational purposes only. Should not be considered individualized recommendations. You get to decide what you want to invest and if you want to invest. When we talk about examples, we will do those trades in the Paper Money software application. Also understand when we talk about investing, investing has risk, especially when we're talking about stocks, right? And that could include the loss of principal or unrealized gains, especially when markets pull back. Now, also remember when we talk about our examples, they are just that. So I kind of walk through what our agenda is going to be. I do want to kind of make some quick comments regarding the market. Okay. Now, when I say the market, what are you referencing? What am I referencing? I'm referencing the S&P 500. Okay. So we're looking at the S&P 500, and let's kind of zoom in on this. Remember, the moving averages that we actually have here on the chart are a 10-day exponential moving average, noted in that red line that's pointed down, and it has been down. Last week I was out. We talked about really on Monday, there, Tuesday, there, Wednesday, there. So when we actually have that red line on the short-term moving average and the price is below that, you have negative momentum. It's not head faking us out here. It's still the same since Monday. Now, normal pullbacks in a bull market might last 1 or 2 weeks, maybe on average. That 20 period moving average, the whole moving average, we're also seeing that we're using that as a proxy for trend. The trend in the shorter term, when you say short term, what do you mean? 2 3 days to 2 3 weeks, it is also down. Now, that could seem like, well, that's negative. No, that actually could be a positive because sometimes when people are looking to buy things, they want the prices to come down a little bit. Okay. So we kind of have to fight that initial thought of prices falling down bad. Okay. Not necessarily. Okay. Now, super quick, what I think is a little interesting VIX, if you look at the VIX, we know that if the prices fall, the volatility in the market, think of the waves in the market. When I say waves, I'm talking about the range of price action, okay, from low to high, expands. And you'll see the VIX as the market's fallen, the volatility has gotten actually a little higher. We have not seen it. Now, remember, when the VIX is high, historically, could be the time to buy, okay? You're going to we'll continue to watch that. But where I think it gets a little interesting, that is kind of like how would you read this? And that's a question for you. We're looking at the S&P 500 companies that are trading above their 200-day moving average. Now, we're talking about the percent. Now, what's so interesting about this is we got the market pulling back, but the percent of stocks trading above their S&P, trading above the 200-period moving average, that's not falling. You could actually even say it's rising a little bit. Well, maybe that's an outlier. Well, let's go look at the 50-period moving average. The 50-period moving average, that's not falling either, okay? Percent of S&P 500 companies trading above their 50-day moving average, the simple moving average, it's not falling either. So this is not like a wide scale sell-off per se. The sell-off is actually has been focused really more in the area of the NASDAQ, okay? And underneath the umbrella of the NASDAQ, the semiconductors, okay? Now, again, we can't feel bad for the semiconductor investors. I mean, even if they got a quarter of that rally from low to high, there probably is some unrealized gains there still. Even if they got in here and sold out here, there's probably still something, okay? So you got to remember, it's just like a roller coaster. If we go up, 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 at some time that roller coaster is bending over and we're coming down, okay? And so you got to understand that is how trends work, okay? They push to the upside, and then when all of a sudden that you get an absence of buyers willing to buy at higher prices, you break the support levels, and it starts triggering the stop orders and or manual sell orders. Now, the last one, and just real quick, that I do want to point out is the equal weighted index. I mean, yes, it's off the high, but it's really not pulled back that much, okay? So really the sell-off so far has really been isolated to the NASDAQ, okay? We're not saying the other things didn't pull back, but they're just not pulling back the same magnitude. They didn't go up the same magnitude, okay? Now, what I want to do is I do want to make mention of the real estate area. Now, remember, when things pull back, especially in growth areas, that doesn't mean everyone just goes to cash and buries their money in coffee cans out in the backyard, okay? They might change, though, what they're buying. Well, like we've said historically, is if those growth areas like technology pull back, they might shift to the areas of staples, real estate, utilities, and healthcare, non-biotech. And if you've been looking, now, this is the area of real estate, okay? Now, could real estate have growth? Yeah, we'll talk about that. But if we actually pull up, let's say, a proxy that we like to look at for, let's say, real estate is really the SPG, one of the bigger names in that space. Well, what, James, so real estate, yes, but what about staples? Staples getting a little push here. You'll notice that the turn in staples to the upside was pretty much at the same time when the market, SPX, started to go down. What about the healthcare? What about it? The healthcare, there she is. When the market started to, now you know this. We go over this every time the market pulls back. I've been in the market 30 years. This is not new, okay? Same thing over and over and over again. Now, here's the deal. The area that has been a little softer of the four, staples, real estate, healthcare, utilities, you'd really say it's utilities. Now, a lot of times we think we have to get all of them to go up. That's not true, okay? Those are the four areas where they tend to go to. Which of the four? If all of them are actually going up, maybe a little unusual, okay? Right now, we got 3 out of 4. Now, let's go right now to Schwab.com, okay? Now, one thing I want to kind of do just real quick is we're going to go Schwab.com. Now, by the way, I'm going to send you this page. So some of you might not know, if you went to Schwab.com, okay, /coaching, you're going to see this page. This page is actually now showing us, that you don't have to learn this alone. Someone could guide you through the process. Myself, I've been investing since 1996. Got started when I was 18 years old. I won't tell you how old I am, okay? Getting close to that 50. Now, if you look at, let's say, the live webcasts and virtual workshops, you might say, I didn't know this, okay? Live webcasts, think classes, and virtual workshops, all right? Now, if you click on this, let me send this link to you. and we're going to get into that search, looking for those growth, past, and forecasts, you're going to see that we actually have virtual workshops and webcasts. Here's the calendar for the month of June. So if we went down to, let's say, June 10th, here we are. We are in this section, growth and value stocks. Now, if you said, well, what other things do you teach? Next session will be managing an option portfolio, trading price patterns, getting started with Thinkorswim. So you get to decide what you want to learn. There are actually live classes, but also recorded. Okay. Now, so that's very important. And by the way, you're going to notice that if you go to the two more events, we have a virtual workshop that is being taught really this week on options. Okay. And so those are longer classes, about 90 minutes each. Okay. And so you can just sign up for those. It's kind of nice. Now, one thing I want to kind of do, and by the way, if you said, James, I'm like maybe a beginner level, intermediate, etc., you can pick, let's say if you said I'm a beginner, it's going to strip out any of the classes that are intermediate advanced, and there you go. So you can just find those right there. So make sure you're used to that calendar feature. Now, what I want to do is I want to log in just real quick on schwab.com, and I want to actually now start searching for growth. Now, here's the thing. If you ask most investors which companies are actually forecasted to grow 10 to 25% over the next year, I think you'd probably get a blank stare. Okay? They don't know. So what do we typically as people do? We get the newspaper, we read the news online, whatever it is that we do, and then we're reacting to, oh, such and such company went up 10% today or 5%. We're always, it seems like we're kind of a day late, dollar short. Well, wonder if we don't have to do that. Wonder if we actually said, well, could I actually see the information that's been the historical and the forecast? Forecast doesn't mean it's going to materialize to actual. What was forecasted? It's just a forecast. Okay. Now, what I want to do is I want to spend just a little time going to research, and that tab right up there, once we log in, we're going to go to research, and we're going to go right to where it says stocks. Now, notice some of you might say, well, James, I don't do stocks. You might do ETFs. You might do mutual funds, etc. You might say, James, I do stocks and fixed income. There's the research tab. We are going to focus on stocks. A lot of the topics, though, could be interesting. I'm not going to lie. It's hard for me not to click on these other things as well. Now, I'm going to click on the stocks, okay? Now, if I actually go to the stocks, what I'm now going to see is we're going to go to where it says Stock Screener. Now, let's take a look at this. Now, our purpose is we're trying to find the growth. Now, I'm going to go to that Stock Screener right there, okay? So we went to research. We went to stocks. Are you with me? Okay, so that's really not that bad. Once we get to this page, just click on that Stock Screener. Let's go ahead and actually do that. Now, by the way, one of the things that we wanted to kind of look at here today is comparing, okay? So stock compare, just since we're here. If I went to stock compare, click on that. This is a nice tool. Now, if I were to ask you, like, what's a couple of the companies or tickers that you like to look at? Now, let's go back. Just want to make sure we're all on the same page because this is the purpose of the class. Stock compare, select up to 5 stocks. Now, wonder if I said to you, you know, James, I've been looking at that real estate area myself, and I was kind of thinking about comparing these companies. Let's actually pick, for example, SPG. Let's also pick, for example, a company like EXR. That's Extra Space Storage REIT. Okay. Now, if you have a lot of, it's not junk. Okay. It's stuff, good stuff. It's your stuff. And you tell your spouse, don't touch my stuff. PSO, no, public storage, PSA, excuse me, PSA, same idea as the EXR. And if I throw in, let's say, one more of these, okay, now I'm going to do this for a little side-by-side comparison, Apple, okay? So when we compare, what is it comparing, okay? Now, the first 4 here are really REITs, okay? Now, I'm going to tell you right now, a lot of times we actually find a company, but I would say over 50% of the time, we find other companies. So we might say, hey, I was thinking about Simon Property Group, but one of the competitors of that company is XYZ, okay? Just like if you were going to buy a home, Okay. You're always thinking, hey, I found a nice home, but you should also look for are there other homes in the area to compare, and are any others for sale? Now, the nice thing about the stock market is the other ones are for sale too. Okay, now let's scroll down. What is it comparing? So number one is it shows the price comparison. Okay, so not bad. We could actually see it color coded right there. We can pick the time frame, the 3 month, the 1 month. We can pick the year to date. You pick that and it charts that out. Okay, so that's price. Okay, so that's not that bad. Now, what I'm going to do is I'm going to scroll down a little bit. And this is where we get into this class, okay, where we start talking about some of the fundamentals. People have told me historically I'm not really a fundamental person. And I think that's the biggest malarkey ever. You wouldn't marry someone and say, do you have, I mean, you ask them if they had money, okay? You ask them about, for example, how much do they make? How much do they spend? And do they have assets or liabilities? And do they have any equity? If you did that, you are a fundamentalist person, okay? I mean, if you didn't, you probably, how did it turn out? Okay. Now, when we talk about fundamentals, right? These fundamentals like net profit margin, return on assets, return on equity, return on investments, and so on, this kind of gives us we're just really looking at the profitability, whether it's on the income statement or the balance sheet. Think of the income statement just like how much money do you make, how much do you spend, and then what's the net? When you talk about, let's say, the return on assets, we're talking about looking at the return on the income statement as a measurement to the assets of the business or the equity, okay? So that's across looking at income statement and balance sheet. When we actually talk about the valuation, now we get into things like, well, what's the price relative to the earnings? And now if we actually said, well, look, Simon Property Group's, okay, PE is actually 14, where if you look at these others, they're dramatically higher. Well, you as an investor, when you go buy something at the store, you like to get value. Well, one of the measurements for value is price earnings. One of the lowest actually multiples here for price earnings is Simon Property Group. 14, and EXR and PS8 are 30-ish. Now, when we actually go down and look at, let's say, things like price of sales, etc., you're going to see, we can see those right there side by side. Scroll down a little bit. Just want to show you this because we're going to get into that. When you look at the sales, now this kind of goes into what we're talking about. This is showing historical. If we looked at, let's say, the sales growth. When I say sales, the other word for sales is revenue. Okay? Well, that revenue growth, now remember, the first four columns are what? Real estate, investment, trust, examples. Which one actually had the highest sales growth? It's yours truly, Simon Property Group. Now, here's the thing. Just because we actually said that's the historical, that doesn't mean it's the future. Okay? The earnings per share growth over the next 1 year, okay, 85%. So this goes back to the comment that we make. Money attracts money. Money attracts money. Now, if we go to well, what about the earnings per share? Okay, over 5 years, 31, still one of the highest, even higher than Apple on the far right. Growth forecast. Now, here's where we were getting into. The growth forecast. Which one actually has the highest growth forecast over the next year? 41%. Now, you got to understand that the information is not new today. This information has been here. They know this, okay? So just because we see it today the first time doesn't mean that other people haven't seen it, okay? Now, you're also going to see the dividend information, how much they pay out of the earnings, etc., coverage ratio. What's those dividends actually paid? Growth rates of those, and you're going to see profitability. So this gives us a table format to compare. By the way, some really good comparison. Now, I just wanted to go, let's go back to research for just a second. Let's go to stocks. How do we get there? Stocks compare. It would be a really good idea to do your due diligence if you find, let's say, a couple tech stocks, which we're going to show. If you find tech stocks, comparing with the other ones in the peer group, and I'm going to show that as we run this search. Now, let's go now to the left-hand side, okay, stock screener, okay? Now, if we click on this, I'm going to go to where it says stock screener. Now, This is where it actually kind of gets interesting where, and I'm going to open this up a little bit where we can see this, okay? So on the left-hand side, we actually have things like basic. Now, when I say basic, some of the things that stand out to us for what we're trying to actually do in this class right now is we're trying to find the growth. Well, as I made mention before, when we talk about sectors and industries, if we're talking about growth, a lot of that growth tends to be in the area of tech and discretionary. So what I'm going to do is in this first area of basic, I'm going to put right here consumer discretionary. There's one. And it shows the industries. So sectors, industries, sub-industries. Okay, so I'm not going to get into industries. I'm just saying put a check mark in discretionary. Second, what we're going to do is going to go to information tech. And we're not going to get into industries. We're just going to say, look, I want to isolate on these two sectors. That's not that bad. Now, the other thing that we actually like to look at is obviously market capitalization. What on earth is that and why do we care? Well, if you took a look at all the shares of the company, common shares of stock, okay, and you times it by the price of the stock, you get the market capitalization. Now, some people like to look at mid caps, maybe like 2 to 10 billion, okay? In our examples, we're looking for things that typically have a market cap greater than 10 billion. Now, if I look at this, it's going to give us, if we said we're looking for two sectors, consumer discretionary and technology, and we're looking for large cap, it's going to give us 106 stocks. But if you said, I saw in the comments, I like to see mid caps, I will include mid caps because you wanted to. Okay, fine. Now, the third thing that we're going to pull up, which I think is pretty basic, is volume. Now, this is volume over the last 10 trading days. Historically, you like to look at volume over, let's say, 30 days, maybe 21 days. This is even shorter, okay? And when we talk about volume, I mean, we're looking for a volume 1 to 10 million. And by the way, that's average volume, or greater than 10 million. Now, you're going to see that how many shares how many stocks does it come given that criteria that we just put on? We got 229. But the thing is, we haven't done anything with actually growth. Now we're going to hit that, okay? So that's not too bad. We really took three things: sectors, market cap, volume. Now, if we go into where it says company performance, this is where it gets into that. Now, the purpose of this is we don't always just want to react to like, oh, Micron went up 300%. I had no clue. Okay? We want to know which ones actually have the history of actually the forecast, history of the growth, of revenue, of earnings per share, but we also want to know the forecast. I'm going to hit the historical to now first. Why? Well, I'll tell you why. Because trends tend to trend. Just because it has had that growth doesn't mean that growth is over. So we probably would start there. Now, what you're now going to see is I'm going to look in on this, and on the left-hand side, you're going to see revenue. You're going to see estimated revenue growth. You're going to see earnings per share growth history. Okay? Why the distinction? Well, just now think about this in your life. Have you ever made, I don't know, $100,000 and spent all of it? I mean, sounded good, 100 grand, six figures, sure. Okay. But it doesn't mean you actually kept anything. You spent all of it, or he or she spent all of it, or the kids spent all of it. Okay. Probably not a good time to talk to me. Just came back from a Hawaii wedding of 21 people. Bad week. Maybe not. Anyway, so here's the little fun there. Now, here's the deal. Revenue, it starts there, okay? So we're going to use that as the first pin. And the second one is, did they actually have any money at the end? And when we talk about the money, we're talking about the earnings per share, the net income over the shares outstanding. So let's go here first, okay? Just like with your family. I'm going to go to, let's say, I'm going to go to really the TTM, the trailing 12 months versus the TTM, trailing 12 months. And we're going to do the trailing 12 months. And what I'm going to do is the trailing 12 months over 1 year ago. Now, When we do this, it's going to ask us, well, what type of growth are we looking for? And the answer is that I'm going to show is we're going to look for just all of it. Okay. I'm going to just look for anything that's flat out growing. Okay. Now, obviously, we could say 15 to 25%, 25 to 50, 50 to 100. Now, you got to remember the companies we're looking at, these are large cap. Home Depot, JP Morgan, Apple, right? Amazon. So if you're getting those big names to actually go up 15 to 25% on the revenue, that's a lot of money in the billions. Okay? I mean, just a couple of zeros. Just one extra zero. That's a big deal. Okay? Now, the other thing I'm going to do right here is I'm going to go to the revenue growth rate. Okay? So when we look at that revenue growth rate, we're going to look at the most recent quarter, MRQ versus year ago quarter. Okay? Now, when we take a look at this, you're now going to see that what are we going to do? Same as before. We're going to kind of hit all of it. Okay? Now, how many stocks is it really going to give us? The answer there, it actually gives us, in this case, 223. If we still come away with too much, chop the bottom off. Chop the bottom off. When you say bottom off, what do you mean by that? We'll just take off anything that's growing less than 15% there, less than 15% there. You might even say, well, I might even take this off, okay? However, you got to understand something. 15 to 25% on revenue, okay, year over year or quarter to quarter, that's big. Now, I'm going to start here. If I go view the 86 matches, the search screen, the screener criteria is right up at the top, okay? So we didn't lose, it's right there. Now, you're going to see companies that probably should be noticeable, like ADI, like Autodesk, like AMD, ANET, okay, AppLovin, ARM. This should not be a surprise to you. Broadcom and so on, okay? Now, how do we go to the next one? 40, okay? You pull this up. It's just going to actually put those extra at the bottom. There's Dell, DraftKings, okay? Five Below and so on. First Solar. There's Corning. Okay, now, so that's how we can now go to the 60 just real quick. Go to the bottom. What are the ones at the bottom that are there too? You get Net. There's Micron, okay? There's Marvell. There's Las Vegas Sands. Some of you made mention of that yesterday. There's LRCH. These are the ones that actually hit that criteria. Now, if you wanted to, one thing we might do is if we go back up, could we actually maybe take this revenue growth rate and kind of increase it? We could, okay? But I now want to kind of focus on, wonder if you said, look, I want to kind of use this as, this is good, this is a history, but I want to kind of look a little bit more going forward, right? Because people invest, you get married for what's happened in the past, yes. What's happening today, yes. But also is what's happening or what you think could happen in the future. That's why you took the job. That's why you got married. That's why you bought the shares of stock, okay? Now, what I'm going to now do is I'm just going to add one piece. Next year, and I'm going to go to the estimated revenue growth. Current year, okay, I'm going to go to current fiscal year to next fiscal year, FY, fiscal year. And I'm going to say, look, I want to kind of add anything that's going to grow 15 to 25%. Current fiscal year to next. Now remember, it's an estimate, okay? If we apply that, it's going to get us down to these 12. And there they are. And it shouldn't be surprising to you. WDC, Seabiscuit, Seagate Technology, Palantir, NVIDIA, Marvell, here they are. Now, you need to know this because when we kind of have prices fall, these portfolio managers go back and say which companies have had a history of a trend. Second, which ones are having a forecast of growth. Because remember, when the prices fall, what does that do to the price multiples? It makes them look more attractive, okay? Especially if they think those earnings and sales are going to be a high chance of hitting that. Prices falling isn't necessarily a bad thing as long as the business is delivering on what that forecast was. Okay. Now, what I want to do is I'm going to use the example. Let's go back to something just real quick. The question was on Micron. We're going to look at a couple of these names if you don't mind. Okay. Now, what I'm going to do is I'm going to go back to one of those was on Micron for just a second. Okay. Now, what I'm going to do is if I went back to, let's say, Micron, let's go back to this. I'm going to take that off. One of those stocks in that list was Micron. Now, remember, this is all A to Z, okay? Symbol A to Z. Question in the chat was on Micron. Well, let's go to Micron for just a second, okay? Now, when I click on Micron, now, by the way, when you look at this, it's going to give us a scroll bar, okay? And you can scroll there. And what it's doing is you can see what the growth numbers are. And you're going to see that those are pretty high numbers. What are those numbers? Revenue growth, trailing 12 months versus trailing 12 months a year ago. The revenue growth rate, okay? That's what those numbers are showing right there. Those are some big numbers. Remember what I said, money tends to attract money. In other words, if the company is making quite a bit of money, it could attract current investors to maybe buy more or new investors. Okay. Now, I'm going to click on that MU for just a moment. If we click on the MU, we're now going to actually just click on where it says Micron Technology. If I click on Micron Technology, it's just going to load the information about Micron itself. Okay. Now, kind of gives us some information, price information, any news, dividends, earnings, what they actually were. Okay, upcoming earnings, so forecasted. There's the historical versus actual. And if we scroll down, this is where we get into those peer competitors. Now, this is kind of the point of the class, okay? So we got to remember is when you look at an industry group, it's not just typically one company. If you get a company that's just making money hand over fist, well, new companies come in and try to mimic what they're doing to take a slice of the pie of what that company is doing. Does that make sense? So there's other companies that are going to be doing the exact same thing or very similar and trying to make similar income streams. Now, when you look at this, we see things like the PE again. Okay, where's the growth? Most of the growth is actually coming, well, if we're talking about which one of these five has the highest growth forecast, it is Micron. Now, the second one up in there as well is really, in this case, it's Intel, okay? Now, let's click on where it says show more. Now, by the way, I'll just make mention of this just real quick. Now, some people kind of think that fundamental analysis is boring. Now, I'm just going to speak to myself, okay? Fundamental analysis is boring when you don't have any money, okay? When you have money, looking at the fundamentals are very interesting. Why is that? Well, it's simple, okay? Because everyone would like to see their assets go up, and you like to see that, especially when they're going up. You'd also like to see the liabilities muted or lower. You'd like to actually see that equity over time increasing, as we see on the balance sheet. I mean, what person who has money wouldn't want to see that? Second, when you look at the income statement, just like your spouse would want to see is our revenue increasing over time. Of course you would like to see it, okay? Now, I'm going to click, let's go. So I put that right there. Let's go where it says show more. So the question was on Micron, right? And when we look at Micron, now we can see the information. We've seen this. Now the second time we've seen this. Now, I'm going to bring these up, and if you don't mind, I'm going to kind of show you how some investors might do this, okay? I'm going to go to just real quick the Thinkorswim platform, and I'm going to now make a watch list. So we kind of comb these out with a rake by the fundamentals. Well, I'm going to go to Market Watch and Quotes, okay? Now, when I go to Market Watch and Quotes, what we're going to do is we're going to make a watch list, okay? Market Watch, okay? Quotes, and over to here to the right, I'm going to click on that, create watch list. Okay, are you with me? And Muriel says, hard to believe Micron was $100 a year ago. The point of this presentation is you want to know which companies have the forecast. Okay? That's why I'm showing you this. So as a takeaway assignment, it would be like if you said, James, it seems like to me, I would want to have a couple stocks, 10, 20, 30 stocks that really have a high forecast of growth. That if that's what if you're saying, am I connecting that right? Yes. Okay. Now, if I go to create watch lists, now what we're going to do is we're going to put those stocks in the list. We're just going to say, pick today's date, 6/10. Okay, June 10th, and I'm going to put a couple of these in. Now, remember we said the third thing we want to talk about is we looked at the fundamentals, we talked about the peers, but how do we use this now using the fundamentals and the technicals? Funny we should ask. AMD was in there. Okay, AMD, ASML. Okay, the other one actually in there was Intel, and the other one in there was LRCX. Now I'm just using the peers. Okay, now if we take a look at this, if I go now save, we now see the 5 that were actually on the sheet before. Now, if you caught my Monday class and my Tuesday class, I said, hey, might be a little careful in the NASDAQ. We said that. Okay, we looked at the lines. Lines are showing red. We're continuing to see that actually kind of decline here. Now, let me pull something up for just a second. So when we talk about, let's say, fundamentals and technicals, what we're looking at is, do we have any stocks where the moving averages are actually green? Now, the 10 is the 10-day moving average. The green box is showing that the moving average is green, should be green. Confirm and verify. The number in the box represents the number of days that the moving average has been green. The 20-period moving average, that is actually, it's green, double check. And the 13 represents the number of days that the moving average has been green. Now, James, what happens if it's red? Well, just like we're seeing in the broad market, NASDAQ specifically, the red box, red moving average. What's the 4 represent? The number of days that the moving average has been that color. So if we're seeing on Micron, AMD, LRCX, that these are showing red, 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 that's telling us caution. Some investors might say, not now. What is the investor looking for? Oh, we'll tell you. Okay. Well, the biggest thing is what the investor is looking for is they're looking for that green moving average, the shorter term moving average, to be green. Just so happens that on Intel, the moving average on the 10-period moving average is green, double check, and the 1 represents for the last 1 day, today. Okay, so that's what the investor is really looking for. Now, if we added those other stocks that we talked about, SPG, okay, if we also added, let's say, what was those other ones? We made mention of SPG, EXR, put these in with some of the stocks. Let's kind of just compare real quick. PSA, and I'm also going to include Kim, okay? Now, if you look at, let's say, these stocks, notice the difference here. So we talk about these fundamentals and then technicals. Well, what do you notice on a couple of these names? Well, which ones are kind of showing the technicals? Well, it's simple. It's the real estate ones, okay? You're going to see that they're green, okay, on SPG, PSA, Kim, EXR. That is where we're getting those setups. Now, when we say technicals, we're looking at the color of the moving averages, okay? Again, the 10 tells us about momentum, 20 tells us about trend, okay? Now, the other timing of this, technicals, could be like the moving average crossover, okay? X plus 2 just means the moving average cross happened 2 days ago. X plus 1 means it happened 1 day ago. Other ways we can see technicals of this is, do we have like a bounce setup? We call that hold. Those are showing bounce setups in those four. The 20-day high, think short-term breakout. We see that in those four as well, hence the green color, and the 55 as well. So this is how we're kind of using a screen, taking those stocks we actually see and then putting them on the screener. Now, here's the deal. If you said, James, where on earth did you get that? I know how you feel. So I'm going to kind of just show you just real quick. If you went to this X page, now a lot of times people kind of like, this is where at the point of the presentation where someone says, if you call right now, you know, instead of $99.99, you call right now, we'll give you it for $69.99. If you call right now, we'll give you free shipping. Look, I don't have anything to sell you, okay? Everything I'm talking about is free, okay? If you scroll down a little bit, you're going to now see that I have scripts that are actually right at the top of my page on my X page. Those column headings, any of those ones you want, okay? So first of all, I don't have a number you can call me. Second, I'm not going to sell you anything, okay? Just having a little fun with you. But if you said, I would like those scripts too for me, you can have them. Just go to that page, you can see them, okay? And you could actually just type in those what's in blue on the TOS platform. Tomorrow I'll teach the trend trading class. If you say, I'd like to learn more about how to put those scripts on, I could show you. But I would bookmark this page because this is really 25, 30 years of work where you just steal it and you can have it. And those are some very helpful ways to filter stocks technically from a watch list, whether it's a public watch list or a personal watch list. Now, the biggest actually thing is, if we take a look at this, if we go back to this, where you put those scripts on, I'll just make mention of this. If you go to setup and then open shared item, okay? So remember, on my X page, if you go to setup open shared item, that is where you can type in what I had on my page in blue on X, and you just walk through that process. I'll show that more tomorrow. So I want to kind of just circle back for just a second. And when we do this, I want to kind of just make sure. So James, when I watch this presentation, what are maybe some of the takeaways? Well, if I was sitting in your shoes, I would definitely want to know what are some of those companies that have had strong historical revenue growth or earnings per share or both. But I would definitely want to know which ones over the next quarter, year are forecasted to have high growth. If you said, I don't know, that ain't good enough. You have the tools, okay? You should actually have a list of 10, 20, 30 stocks that actually have that growth. Now, James, do I have to look at technology and discretionary? No. If you said, I don't like that, I want to kind of put something on more of a value or maybe an income investor, you can select that. So I want you to customize that to what you like to look at. I want you to kind of get in the screener and kind of look for some of those companies that actually have that growth in the sectors of your liking, et cetera, or where you think that portfolio for yourself you might want to focus on. So I'm out of my time here actually today. The biggest actually thing about this is, as investors, we tend to be too reactive. We find out what some of these stocks have done after they've gone up 500%. And all that tends to really do is frustrate you. I don't want you to be frustrated. I don't want to be frustrated. Okay. So this is where you can kind of do some due diligence and say, what are some of those companies that have the historical trend, but also a forecast, and start watching these stocks on a daily basis. Remember, pullbacks, they tend to be more opportunities. Okay. Prices falling down suppress the price multiples, price earnings, price sales, and so on. It makes them potentially more attractive. And so that's what you got to remember is you have to fight that initial sense of, oh, it's down, it's bad. Nah, it's a fundamental issue. You're thinking, well, and a technician, prices falling down means the multiples actually look more attractive, assuming that actually the company continues to perform. And second thing, from a technical perspective, they fall down to those moving averages where more investors might try to buy at a 30, 50, and so on day moving average. So I hope this has actually been helpful here today. Now, if you said, hey, James, I actually didn't know there's some of these things about coming to the Schwab coaching, didn't know about that, there's a win. And those things I share with you, they're free. You can have them. Now, also remember that this class also has a playlist. So if you said, James, can I actually go back and actually watch previous classes that were actually taught and recorded? Yeah, right there. Second, if you said, James, where do I actually see this page on YouTube? You're right here. Okay, bookmark. And so that way you could see all of our content right on YouTube. You do not have to be sitting at a computer to watch our stuff. I was sitting on the beach in Hawaii last week, right on my phone, watching some of these webcasts on the beach. So no matter where you are, there we are. Okay. So don't forget to subscribe. That way you can see all of our content as well. So I'm out of my time here today. Go out and actually use that search and actually start to create that list for yourself. Maybe 10, 20, max 30 stocks that you're going to be watching. Stay tuned for our next, and also practice putting on some of those scripts right on the top. Tomorrow at 1 Eastern on the classic trend trading, I'll show one or two how to put those on. Really not that bad. You put one or two on, you can put any of them on. Now, remember with what we talked about here today, remember that all investing has risk. We're trying to use fundamentals and technicals to try to maybe lessen the risk. There's still risk. But we're trying to actually buy something where it's a viable business, growing fundamentally with a trend. And this has been the class on growth and value stocks. Stay tuned for our next webcast coming up right at the top of the hour. Thank you, Connie. Thanks to all of you. And have a great day. And I'll be back tomorrow at 11 a.m., 1 p.m. Eastern time on trend trading. Stay tuned for our next webcast coming up next. Bye-bye.